Welcome back to Headline Buster. Today we want to take a closer look at China's newly released economic data in the second quarter. Is it all doom and gloom, or is China on the brink of deflation? Well, to talk more about these, I'm joined by Mr. He Weiwen, Senior Fellow at the Center for China and Globalization, joining me in Shanghai. Great to see you, Mr. He. And Mr. William Li, Chief Economist at Milken Institute, joining me from Henderson, Nevada. Thank you for joining us. And Mr. Saurabh Gupta, Senior Asia-Pacific International Relations Policy Specialist at the Institute for China-America Studies, joining me from Washington, D.C. Great to see you. Thank you for joining us, gentlemen. So, Mr. Li, why don't I start with you? China's newly released data in the second quarter has not been interpreted in the most positive way. A lot of reports in the West have been focusing on this, saying that China's recovery is losing steam with faltering business confidence. Let me get your read on this. What do you think after seeing the data?
I think that characterization is coming about because the pattern that we've seen in the West of a post-COVID recovery is a very rapid spurt of growth that is almost in the double digits, and then it starts to eventually taper off. And we expected that from China as well when it released the COVID-19 restrictions. When we saw the first quarter, it was really quite strong, but unfortunately the second quarter didn't continue that momentum. People started asking the question, whether there are any fundamental vulnerabilities that are holding back China from experiencing the typical pattern of recovery. So I think that's the source of concern. It's sort of a query as to why is China different from every other recovery we see in the world? Not so much a blame of China, but rather a question that says, are there other things going on?
So different patterns are being observed when it comes to recovery. Mr. Li, talk to us about your thoughts on the China collapse theory. I mean, are you surprised to see that after 30 decades, after seeing China has become the world's second biggest economy, after seeing how resilient the economy could become, that this theory is still around? Is there any merit to it?
Well, I think it goes too far to say that there's a cheering group out there that's cheering for China's collapse. In fact, I think most people are cheering for China's success because many of the economies of the world are tied to the success of China, especially in Asia and including the United States. After all, China is a vital part of the global supply chain of which the United States has benefited. So I think the real questions, I think, have to settle on what my colleagues have just said. Do we have sufficient domestic demand within China to have it a self-sufficient growing engine for the rest of the world? Will China be able to be the second largest economy that provides an engine for growth for the rest of the world as the rest of the world is slowing down because it's fighting inflation? And China, fortunately, has got the right balance of supply and demand so that it itself domestically has not experienced the kind of inflation we've seen in other parts of the world, including Europe and the United States. So I think those are the kind of perspectives that we have to have here. And many of the American companies that are in China, from JP Morgan to Tesla to Bill Gates coming to China, they all say the world is committed to staying in China. And the world is committed to China's success because the world's success depends on China's success. So I think those are the kind of perspectives that are really dominant in the West. The questions that are being asked would be, is China continuing to be a good place for more investment? Should we be putting more money? China's own policy of diversifying its production, going upscale to higher value-added production, and moving a lot of industries out of China, the low value-added stuff, to other parts of Asia. Should we be following those dollars? And so the questions are really much more a tactical question about where best Western dollars should be going. And we're looking for the government for guidance as to where it is that China really wants to make use of foreign capital inflows, which it has clearly invited in the last several statements that the President Xi and others have made. So I think those are the kind of perspectives that we have to keep in mind. And there really isn't an army out there cheering for China's demise. In fact, it's quite the opposite. Everyone is cheering for China's success.
Those are legitimate concerns, I must say. These questions on investors from the West are also on the mind of Chinese business people, entrepreneurs here. And there is the talk of deflation, right? I do want to get your take on youth unemployment problem. I mean, this is a global issue rather than just a China problem. We've seen this problem in a lot of European countries, in Spain, in Italy, and in the United States as well. How are you looking at China's efforts in tackling this issue, providing about 1 million internships or focusing on vocational training for 15 million people. Is that enough? Will it work?
Actually, you're absolutely right to point to that figure. The fact that youth unemployment is a problem all over the world. Integrating new workers into the workforce is something that every country is facing. United States, Europe. Europe has got double-digit youth unemployment numbers for the longest time, and it's lived with that. But I think the reason why I, among other Western commentators, have pointed to China and China's problem is because youth unemployment is generally addressed, as Mr. Gupta said, when private sector creates a lot of jobs and innovative jobs and high value-added jobs and high production jobs. And usually the source of those jobs are going to come from the high-tech industries, the Alibabas and Tencents of the world, the innovators that make use of the very well-trained people coming out of Beijing University and the great engineering schools that China has. But when we saw over the last 2 years a shift in the policies of China toward Tencent, Alibaba, and some of these larger technological companies, the Western investors became concerned, and we pointed to the unemployment numbers of the youth to say, hey, that policy switch has got huge consequences for the absorption of the next generation of workers and the source of productivity for China. So what is going on there? And now that we seem to get some clarification that China has in fact not really changed its attitude toward technology, that it's welcoming innovation, in fact it's trying to spur innovation, there may be some easing of concerns, but I think the fact that that reversal took place and now an explanation and the rise in youth unemployment puts together a lot of circumstantial evidence that says, well, China may have some deeper structural vulnerabilities that the policymakers have to address. And so youth unemployment is really at the spearhead of things that Western investors look at to see the health of China. When that number starts to go down and go down in a convincing, permanent, sustainable fashion, then more people will be convinced that China is going to be back on the right path to the kind of growth rates it had before. But if it's not able to get that youth unemployment down, then I think this is going to have even more consequences for the other policies of China, which is boosting domestic consumption. Households have, well, there are two things that economists know drive consumption. One is wealth, and the other one is income. Family income is a hugely important thing. And when my children are not getting jobs, I'm not going to be consuming, right? I'm going to be trying to help my children. And when the property market is in disarray and my wealth is uncertain, I'm not going to consume. So these are two sources of vulnerability that we have in the Chinese economy that we in the West are looking at and saying, what are they doing about it? And so I think that's really the questions that are being asked, and we're hoping to get some clear answers.
And youth population, they're actually a very important driver for overall consumption. This age group tend to spend more in education, in culture, in communication, etc. You know, restoring their consumption power, increasing their employment might be very important for restoring recovery post-pandemic. Thank you very much. I guess that's all the time we have for this edition of Headline Buster. We appreciate all your perspectives, Mr. Gupta, Mr. Ho, and Mr. Lee. Great to have all of you with us. And thank you for watching. Bye for now.